Good afternoon, ladies and gentlemen. This is Brian Dewhurst with Uncommon Wealth Partners, bringing you your market update for mid-February and Bitcoin briefing. I want to jump into it today. A lot has happened in the last 2 weeks in the markets and in Bitcoin, and so we want to cover that. S&P at 2.19, NASDAQ at 4.86, Dow Jones at 2.02, gold up 3.06, and Bitcoin is still down about 29%. We'll cover those, individually, but had some pullback in the S&P 500 and the Dow. NASDAQ actually went up. So no news there in terms of the pullback, and gold went up, and Bitcoin's been on a wild ride. So we will jump into it today, but first some news and some cartoons. I was home, and my dad likes the newspaper cartoons, and so he had me in a cartoon mood today. And so I thought I'd throw this in there. I wanted to talk real briefly about the dollar and interest rates, because I think it's a total misconception of why interest rates go up. And I don't think really fundamentally many Americans understand the value of their dollar, because it's been pretty stable in our eyes, even though it's lost about 99% of its purchasing power since 1913 due to inflation. But we'll cover that at a later point. But wanted you to see this. This is a chart on the dollar, and you can see it made an all-time high here in 2017, and we're on a massive kind of decline here. In that, you can see in this cartoon, we have Paul Volcker, who was the Fed chair back at the late 70s, early 80s. And then we had Alan Greenspan, Ben Bernanke through the financial crisis, Janet Yellen, and now we have the new guy, Jay Powell. So as you see, though, on the chart, you really see interest rates going from 16, 17% down to almost zero. And now we're going to have rates go up. But rates aren't going to go up because our economy is thriving and everything is awesome. Although, we are seeing wage growth finally, and we haven't seen it in over a decade, meaning employers are paying people more money, and we covered that in a previous video. So I think there are positive things happening in the economy. But with that said, in terms of the dollar and the deficit, there's a lot of negative things happening too. And so, as we've shown you in past videos, the government has printed just a ton of money, and it's starting to slosh around, and that leads to inflation. And that is where the value of the dollar is going down, as we see in the chart. It's kind of popped. The dollar popped back up as the stock market went down, and now as the stock market's come back up, the dollar is falling down. And so interest rates are going to have to rise because other countries and institutions at large aren't buying the U.S. Treasury debt like they were at these low interest rates. And they're saying, hey, for the risk that we're taking and tying up money in treasuries, we need to get paid more yield for how much money you're printing. And so you're going to see the value of the dollar, I think, continue to decline, and you're going to see interest rates start to creep up to protect the value of the dollar. So it's going to be a dance the Fed is going to try to make, and it's going to be interesting to watch, but it will have some shocks, potentially, like we just saw in the stock market. And we'll get into that now, because I think that's what everybody wants to see. But I thought that was a funny cartoon, and I think it's important, as we've talked before, as things change geopolitically and globally, that there is going to be pressure on the dollar from our deficits and from abroad. And I just saw an article the other day from a gentleman who oversees the federal budget in government. He estimates the shortfall this year in 2018 to be $1.25 trillion at the federal government level. And so looking at the tax receipts and all the different ways the federal government takes in money, and then how much they spend, and then servicing the interest on the debt of about almost 21 trillion, they're going to have a deficit of almost $1.25 trillion. Last year, it was just under 600 billion. So that's a double in 1 year, and we just passed tax cuts. So it's an interesting game the government is playing, and we want to continue to cover this and just communicate with you guys as to what that's looking like. So anyways, let's keep going. So this is the stock market, the S&P 500 to be exact, and we're on a weekly chart. So we zoomed in a little bit because I wanted to show you the red candles here. As we broke through the 21-day moving average, the S&P fell about 10% in that given week. And I wanted you to see it in context of the longer term move that we've been on, and how we've had red candles and we've had negative markets for a short period in context of this greater uptrend. And so even in here in 2014 through about 2016, if you see here and you just go across sideways, we traded sideways for nearly a year and a half, where the market really wasn't making new highs. And we saw negative consolidation, and then we moved on to new highs. So this isn't something new, and this shouldn't concern us. Another statistic I heard was the market didn't lose more than 3% in over 404 trading days. So this was due, the pullback was necessary. It was probably exaggerated a little bit by all the algo traders and all the computers that are plugged in to trade, but on a whole, it's probably healthy. And so thinking about the stock market making new highs, you want to think about it like a nice stair step, as opposed to probably what we've been doing in the last 404 trading days is trying to walk up a slide. And, we've all tried it as kids and maybe some of us as adults. It's not as easy and sustainable as walking upstairs. So the pullbacks are healthy, and it allows the market to consolidate gains, allows new money to come in, and for us to set higher highs. So just wanted to walk through that. On our red light, yellow light, green light chart, we're still green on the monthly S&P 500. And then on the chart, we typically use monthly now. You see we still don't even have any red candles. We'll update this again at the end of the month to make sure that hasn't changed. So we're monitoring that. But again, we should continue to be open to higher prices. And like I said, the dollar volatility and things that they're trying to do at the federal level are going to have an impact with the stock market. But even amidst that decline, we got a large portion of that decline back already within a week. So a healthy appetite for more upside or more exposure to the stock market here. Then I wanted to show you on the moving averages chart how this looks in context. We don't have this rolling over effect like we do. That was the financial collapse. But even in the context of this uptrend, we've had several times where the price has broken through the green shorter term moving averages and even into the red, the longer term moving averages, and it's regained itself and come back to make higher highs. And even in this context of this year and a half where we traded flat, like I showed you on the last chart, the price broke through both the green and the red lines, and they kind of inverted, and then we regained new highs in the stock market. So this volatility is normal in the context of a uptrend market. We've kind of showed you that in multiple different ways, but this volatility that we saw, over the last 2 weeks isn't concerning yet. Obviously, we want to monitor and going forward and see if the chart shows us anything different. And certainly it could take a turn like 2015 and 2016, where we saw larger losses and we needed to consolidate for a time being. That's normal over time. And we, like I said, we haven't had that type of a pullback in over 404 trading days. So it was overdue, to say the least. With that, we're now covering gold. Talked about why, because of the dollar and its instability. Not only that, China is trying to buy more gold and attach its currency to gold to assert itself on the global stage. And so as we kind of talked in the past, gold has consolidated to multi-year lows and has started a new uptrend. Our squeeze is still looking good down here on this chart. We've got 6 green dots and we've got blue candles. So that gold chart looks good. And from the last update, gold has set newer highs. And so, again, that trend looks to be intact still. And Bitcoin. So Bitcoin had a really interesting 2 weeks, kind of like it did in the stock market. And so I wanted to cover this. In the last video, I kind of said that Bitcoin would continue to consolidate its gains, trading down and sideways. And I still think that to be true. And I still think we'll buffer up here to this kind of support trend line, if you will. And then I think we'll make a lower low. And, at some point, I think we'll flush out of this on the upside. And I think that range is kind of starting to narrow here where it's going to break over that trend line. And we could do it now. But again, I think you'll see some more consolidation. So Bitcoin's it touched down at about 6,000. You see this candle here, and we've come back and hit 10,000. So a pretty large move in 2 weeks for Bitcoin and cryptocurrency, rebounding off those lows. But I do expect further weakness to consolidate those gains as more people come in and kind of see some price action like I diagrammed on the chart with the arrows. So one other chart on Bitcoin, this is the Bitcoin futures contract. And now that we're getting some time and price history under our belt with these charts, the futures contracts, because they just went live in December, as we get more and more data, the charts and indicators will perform hopefully better. But this is the daily chart, so a much shorter time frame. But we did get a green arrow, bounced off the low, kind of hit that lower bumper. We talked about it like bumper bowling. And we're seeing more green dots in here, and we're seeing the yellow fade. And we got blue candles approaching the 21-day moving average. So super bullish signs for Bitcoin in general. And so wanted to cover some news in regards to cryptocurrency, blockchain, Bitcoin, because I think it's super interesting and important. And like we talked about in past videos, we said that you're going to see more global adoption. You're going to see global adoption from corporations. You're going to see more global adoption from countries. And you're going to see more coins other than Bitcoin be talked about. And so I wanted to highlight that here today. JP Morgan proclaims Bitcoin ETFs are the holy grail. If you remember in a past video, Jamie Dimon, the CEO of JP Morgan, said Bitcoin is atrocious. It shouldn't touch it. It's worthless. All those wonderful different words that he used. And now you see the futures contracts rolled out in December where Bitcoin was hitting 20,000. And now Wall Street has the ability to short Bitcoin. And we magically see Bitcoin go from 20,000 to 6,000. Now that Wall Street can get involved. And now Wall Street is telling you that Bitcoin ETFs are the holy grail, mainly now because they can monetize it for their business model and they can have all their advisors tell people to buy Bitcoin ETFs. So it's so great that Wall Street has just helped us so much and helping collapse the price of Bitcoin down from 20,000 to 6,000. But it will help a new wave of people get invested, and that's good. But don't mistake the doublespeak that these companies in Wall Street never fails to surprise with. So I'll get off my soapbox on that. Western Union confirms it's testing Ripple technology for money transfers. Western Union sends money all over the world. And we've talked about in the past that immigrants in this country use cryptocurrency to send money back home because it's cheaper and it's faster. And truthfully, it's more predictable for them when you're sending dollars back and they might have to convert into other currencies. Cryptocurrency is an effective way for them to send money. So, and now we see Saudi Arabia's central bank signs blockchain deal with Ripple. Ripple is another cryptocurrency. It's more of a centralized blockchain and has seen a lot wider adoption across corporate America. They've signed deals with American Express as well, to name a few names. And so you're seeing more and more blockchain talk come full circle in the media and with corporations and with countries. And so as always, we're going to try to continue to cover this and shed light on it. And we do think we need to start talking and understanding the role of blockchain and cryptocurrency in our economy because we think it's here for the long term. And that's the way we're viewing this, long term. And so we're going to continue to bring information on that. Hope you guys had a great week and hope you have a great weekend and President's Day. The market is closed on Monday for you, FYI, so the market will not be open on Monday. But yeah, going to continue to bring us information and hope this was helpful. Please like or subscribe to our channel and please check out our podcast. We had our first guest interview on as well this week with Drew McClellan. So that is the Uncommon Life Project on iTunes, Stitcher, or Google Play. So trying to bring you much more information and resources, and we bid you a farewell and great weekend. Thanks, everybody. Bye. The material in this video has no regard to the specific investment objectives, financial situations, or particular needs of any viewer. This video is presented solely for informational purposes and is not to be construed as a solicitation or an offer to buy or sell a security or any other related financial instruments. Nor should any of the content be taken as investment advice. Any of the opinions expressed in this video are subject to change without notice, and Uncommon Wealth Partners LLC is not under any obligation to update or keep current the information contained herein. Uncommon Wealth Partners LLC and its respected officers and associates or clients may have an interest in the securities or derivatives of any entities referred to in this material. Uncommon Wealth Partners does not accept any liability whatsoever for any loss or damage of any kind arising out of the use of all or any part of this material. We recommend that you consult with a licensed and qualified professional before making any investment decision.